ETFs and index funds. Now, I know that sounds a bit like financial jargon, but stick with me because it's really not as complicated as it seems. Imagine you're at a buffet, and instead of filling your plate with just one dish, you're grabbing a little bit of everything. That's kind of what ETFs and index funds are all about. So, let's break it down. First off, what the heck is an ETF? An ETF, or exchange-traded fund, is like a basket of different stocks or assets that you can buy and sell on the stock exchange, just like individual stocks. Think of it as a collection of your favorite snacks all in one box. You can get a taste of multiple companies without having to buy each one separately. This is super convenient because it allows you to diversify your investments. You know what they say, don't put all your eggs in one basket, right? Now, index funds are a bit similar, but with a twist. An index fund is a type of mutual fund that aims to replicate the performance of a specific index, like the S&P 500. So if you invest in an S&P 500 index fund, you're essentially investing in a little piece of the 500 largest companies in the US. It's like having a mini portfolio of the big players without having to pick and choose. Now, you might be wondering, what's the big deal about these funds? Well, let me tell you, they come with some pretty sweet benefits. First, they're generally low cost. Because index funds and ETFs are passively managed, they don't have those hefty management fees that actively managed funds do, which can eat into your profits. It's like choosing a home-cooked meal over a fancy restaurant. Both can be great, but one is definitely easier on the wallet. Another perk is that they're super easy to buy and sell. With ETFs, you can trade them throughout the day, just like stocks, which gives you flexibility. If you see a dip in the market, you can swoop in and grab some shares at a lower price. Index funds, on the other hand, are typically traded at the end of the trading day, but they still offer that simplicity of investing in a diversified portfolio. Now, I know what you're thinking. Are they worth it? And honestly, that depends on your financial goals and risk tolerance. If you're someone who wants to invest for the long haul without getting too caught up in the day-to-day market drama, then these funds can be a fantastic option. They're like a set-it-and-forget-it approach to investing. Just pick a fund that aligns with your goals, throw some money in, and let it grow over time. But, and this is important, you've got to do your homework. Not all ETFs and index funds are created equal. Some might have higher fees or track different indexes, so it's crucial to understand what you're investing in. Look for funds with low expense ratios and a solid track record. It's like choosing a reliable car. You want something that's going to get you where you need to go without breaking down on the side of the road. So, in a nutshell, ETFs and index funds can be a great addition to your investment strategy. They offer diversification, low costs, and ease of trading, making them accessible for both newbie investors and seasoned pros. Just remember, investing is a marathon, not a sprint. It's all about finding what works for you, staying informed, and letting your money do the heavy lifting over time. So, grab that buffet plate, load it up with a variety of investments, and watch your financial future flourish.